Hey everyone, it is Jay Soloff with Investors Alley, and this is our options trade of the week. So I'm here at Market Chameleon looking at our options block trade screener, and today is an interesting day because it's the end of a quarter in terms of expiration. September expiration is the last expiration period for the most recent quarter, so there's going to be a lot of activity that's just management, position management, closing out trades. And you can see here, if you look at some of these trades, anything here, these really small values, a lot of small values, 9, 4 cents, 1 cent, 4 cents. These are all closing trades probably because it's the end of the quarter, and just a lot of position management. So you scroll through these, and there are definitely some opening trades. And usually if you find like a buy right trade, something like that is going to be an opening trade. That's not to say you can't close a buy right with another buy right, but a lot of the times you're rolling out the call or letting your shares get called away or something along those lines on a covered call trade, so you don't necessarily need to close the whole buy right trade. So a lot of these buy right trades are going to be opening, and for instance, here's one in Ford that's pretty interesting in January of next year. So if we click on this, we can take a closer look at that. We go to the options, and we'll look at the options chain for Ford. And there's a tab here for key trades, which is a pretty good spot to find some of the more interesting trades. You can also look at this trades list to see all the trades. So here's that buy right. So let's look at some details. We have a 16,000 lot options trade. So that's a lot. Because these options are done against shares, and remember, an option is 100 is one option is equivalent to 100 shares, controlling 100 shares. So we're talking about someone bought most likely about 1.6 million shares and then sold 16,000 of these calls against it. So what we have is we have the 10 strike being sold with the stock at about 9.25. So an out of the money call with about 4 months to expiration. So this is a yield trade, but also allows some upside. I would call this moderately bullish because you can make money all the way up to 10 before the short call caps out the stock. And that means this person can make about 75 cents on the on Ford going up, which is let's just say this is a $10 stock, that would be about 7.5%. Now it's more like a $9 stock, so we're almost talking about not quite 10%, about 8-9% on upside in the next 4 months. So it's not capping out the upside, but meanwhile they're also pulling in this 22 cents on the call, which equals to $352,000 in premium. If you look at this though in terms of yield, you're talking about a 2%, over a 2% yield on that, somewhere between 2 and 3% yield. So in 4 months, that's not bad if you analyze that, you annualize that, and you're talking about 6-7%, over 7% yield plus whatever dividend Ford is offering. So you're getting a decent yield plus some upside potential. This is the sort of trade I would consider as moderately bullish. Again, it's a 4-month trade, so there's a lot that can happen in 4 months, but we're also we're talking about a stock that's not super volatile. So you're giving yourself that 2 to 3% yield plus the chance to make 9% plus on the upside, and that's giving you some decent upside potential. So this is a sort of trade you could easily make in your own account. Ford's not that expensive. You could buy 100 shares for under $1,000 and do one of these trades pretty easily on your own. Speaking of that, if you're interested in learning more about these sort of trades, covered calls, you can click on the link and learn about my options trading mastery course, where I have 11 different units. One of them is on cover calls, and just a lot of info in there if you're interested in upping your options knowledge.